Hey everyone, I'm Fred, Future Engineering Bets, where we look at what the major OEMs in automotive, motorsport, defense and aerospace may be doing in the future and how it's going to affect you. And today we're going to be talking about the big reset, the big recalibration in the EV market. You could say that boards aren't being rewarded about how many EV programs they're going to deliver now. They're being rewarded for how much they're protecting cash. Well, all the business car users have them, yes, because the government given massive tax benefits to users of company cars. And it's to the point where having a non-electric company car is almost pointless. Ford have done around about 20 billion write-down in capital programs, 20 billion, right? They've scrapped their three-row SUV that was going to be EV. They've scrapped the F-150. It's huge. That's affecting the whole market going forwards. The big stuff, forget it. They're out of it. Porsche, of all companies, they really bet big on EV and they are paying the price. A 90% reduction in carbon emission is massive and it shouldn't be underestimated. And there's a really strong and growing argument that says, why are we trying to go from where we're at to zero in around about 10 years? It doesn't actually make any sense. And if you've seen the rush of Chinese cars coming in, what the legislators probably didn't think was that by moving to this EV focused policy, that they would enable China to undercut and pretty much wipe out a huge part of Europe's and the UK's automotive industry. Hey everyone, I'm Fred, Future Engineering Bets, where we look at what the major OEMs in automotive, motorsport, defense and aerospace may be doing in the future and how it's going to affect you, your investments, if you're a capital investor, if you're a private equity firm, if you're an OEM or tier one, tier two, what are the bets you're going to be making? And today we're going to be talking about the big reset, the big recalibration in the EV market in the automotive world. So that's what the automotive companies are doing with their EV plans. And there's been some pretty massive write-downs that we'll come onto in terms of where they've had to back out of EV programs already. So you could call it the great recalibration of 2026. The industry has shifted from a compliance at any cost type model that they adopted in around about 2020, 21 into a holy moly, we are running out of cash. We've got to generate cash. We cannot afford to just comply with government demands when the consumer doesn't agree with the legislation. You could say that boards aren't being rewarded about how many EV programs they're going to deliver now. They're being rewarded for how much they're protecting cash and making a flexible approach to the market. When you look at it in terms of the hybrid platforms, the battery electric vehicle platforms, this is now becoming a more flexible approach. And of course, we've all got opinions on this. We all have what we believe is the right way. So we'll talk through some of those that you can form your own opinion on. And also really from an investment and capital point of view, where would you put your money right now? So if we go back 5 years, every automaker was pretty much thinking we're going to be having to accelerate rapidly away from internal combustion engines called ICE, and even hybrid engines will be a fairly short-lived thing. And we're going to be all going EV, particularly for cars. Let's put trucks and other things in a separate category for now. The rapid adoption that everybody expected, it didn't quite happen. Where it did happen is in business, and everyone often points to business. Well, all the business car users have them, yes, because the government given massive tax benefits to users of company cars. And it's to the point where having a non-electric company car is almost pointless. So if you're in business, you buy an electric car. It also so happens those same people that get company cars tend to be more middle class. They have houses where they can easily have a charger installed. So there's a number of aspects here in terms of the actual current market. But if you look outside of business and you look at the private sector, its growth has been much smaller and it's impacted the programs. If we go through the reports of the various automakers, we're looking like there's high risk of stranded assets in EV-only plants. If your plant is EV-only right now, you're in a worry zone. You know, the ones that have nailed it, more like the BMWs, where they make sure they can put down different battery or hybrid or powertrains down a production line, means that they continue running and they can flex to the market demands. There's a lot more lobbying going on now. The OEMs and the groups are pushing on legislative bodies to say, look, this isn't working. It isn't quite right. We need to consider hybrid and we need to consider sustainable fuels. Sustainable fuels really, in brief, mean fuels that don't take oil and turn them into carbon emitting fuels that are releasing new carbon into the atmosphere. A sustainable fuel, in theory, is only ever releasing carbon that's been taken out of the environment recently. It's like a closed loop. Now, of course, margins on EV are very important. In order to run a successful business, the margins on the cars you make are very important. And then it comes into then the whole market post-sale, so then the second owner, third owner, the depreciation of that car, what happens to it, and that'll affect whether or not people buy the car in the first place. Now, again, the business owners are much less interested in this when they're leasing, but eventually the leasing companies pay the price when their assets have been written down at a far higher rate than they ever thought, and they're not making the margins that they thought on leasing them to business users. So you go back a few years and private equity and major institutional investors, Vanguards and the BlackRocks, they have shifted their valuation models for OEMs, prioritizing free cash flow, punishing OEMs that sacrifice too much cash flow on getting market share for EVs. The preference is more like generate cash. If that means sticking with hybrids and ICE for right now, let's figure that and use buybacks and other things that we'll cover in a minute. As we've already touched on, dedicated EV factories are now at risk of being slowed down, abandoned in favor of those that can support both EV and hybrid lines. It's favoring a flexible architecture approach to the market and ultimately de-risking the balance sheet. So investors are encouraging boards to make massive one-time write-downs, but they've been massive, but they can't be doing that regularly. It'll just destroy the company and the share price. So these are one-time, look, we're going to take a massive hit, huge capital write-downs, EV errors, mistakes in terms of our bets, and we're going to move forwards. And what people are ultimately moving forwards with is flexibility in their powertrains. It's not going to be all EVs, and the reality is it might never be. Genuinely, there's always going to be the potential for hybrid vehicles. And the hybrid is interesting because hybrid can be made of anything. There will be a battery and a motor probably in a hybrid, but the actual power source fundamentally that gives it the main power and the range can be hydrogen, diesel, petrol. It can be different kinds of engines. So interesting one to watch. So let's talk through some of the key things that happened last year in the OEMs. Ford have done around about 20 billion write-down in capital programs, 20 billion, right? They've scrapped their 3-row SUV that was going to be EV. They've scrapped the F-150. It's huge. That's affecting the whole market going forwards. The big stuff, forget it. They're out of it. 20 billion is I just think is massive. It's a massive number, but they've really pivoted to either hybrid electric, and there's more and more talk about range extenders. They're popular in China. The thing I have with range extenders is really you're just using petrol to create electricity to then power a charge a battery. It's a kind of a nonsense of itself, but we'll have to see where they go with that. For me, a really big one was Honda. Their first financial loss in 70 years. Incredible. 15.7 billion write-down. They cancelled the 0 Series or O Series and another car called the Acura RSX. Honda's plan right now is to dominate in the hybrid engine arena. So that's not meaning they're not going to create EVs and have EVs, but hybrid engines. That's where they see their future. General Motors has done over a 7 billion write-down and focused on slowing down their EV vans and being more flexible in their approach. Porsche, of all companies, they're really big on EV and they are paying the price. They've cancelled their Cayenne EV and their flagship SUVs coming up. They've slowed everything down and they're trying to continue their existing internal combustion and hybrid powertrains longer. But that's also hurting them because, for example, the Macan, they've had to stop selling in Europe because it doesn't meet the legislation anymore. And that's due to other reasons, not powertrain related. The architecture wasn't kept up to date. So now it's having a knock-on effect because the vehicle they thought they could now switch back to, they can't. Porsche have written around 1.8 billion, nearly 2 billion on capital restructuring. It is absolutely vast. Again, Porsche is going to maintain now a luxury internal combustion engine focus with hybrid platforms and EV because they recognize they can't afford to go all EV. Mercedes, a big one. They've abandoned their EV only target by 2030. They've slashed their margin guidance down to between 3 and 5%, down from around 10%. And they've written around 1.6 billion off restructuring for EV. So that's a lot of money written off a lot of firms, isn't it, in the OEM space? And you can imagine how this is trickling down to tier ones, tier twos, and the impact it's having on their R&D programs. And particularly if you're involved in either electric vehicle, you're going to be impacted. But powertrains in general, it's driving the pressure on development in a different direction. efficiency is going to be key. Thermal management of batteries is going to be key to get range. So let's look at some of the consumer landscape and the legislation. If we take the EU as a block, the 2035 ICE ban is being softened. Recently, the mandate shifted from 100% to 90% reduction target, effectively legalizing hybrid vehicles ongoing and making space for sustainable fuels in the future. Now, a 90% reduction in carbon emission is massive, and it shouldn't be underestimated. And there's a really strong and growing argument that says, why are we trying to go from where we're at to zero in around about 10 years? It doesn't actually make any sense. If we were to go from where we're at to a 90% reduction, would that not be a massive change? Yes, it would. And if that last 10% is the hardest to achieve, should we not focus on hitting the 90? That sounds like a sensible option. So that's where the lobbying pressure is coming from the automotive companies saying we're being killed here. And we'll come on to Chinese competition in a minute, but the legislation has really suited the Chinese competition coming in, which is hurting the automotive companies, particularly those in the lower price segments, such as Stellantis, so your Citroens, Peugeots, Fiats. But people want to include sustainable carbon neutral fuels in the future, because that means we can carry on using the engines we've already got, and we have sustainable fuels, which, as I've already said, doesn't add any additional carbon into the atmosphere. Now, the UK is a little slow, and the pressure on the government is that we need to catch up at least with Europe and get in line with things. Now, some things have been allowed. So OEMs can borrow credits from future years up until 2029. And the penalties have been reduced from 15K per vehicle to 12K per vehicle for not hitting targets. So there's some let off, and there's currently room to allow hybrids to be sold until 2035. I think the reality is, regardless of what the politicians think, hybrids are going to be around a long time. And all these rules are going to end up changing. So if you're betting on this, you've got to bet on hybrid being there alongside EV. It's not going to be that hybrid gets turned off. And we could well see sustainable fuel really take off in the next 10 or 15 years. We don't know. But the logistical issues that surround EV for the masses, and infrastructure and availability of charging, in the price you're paying at industry-led metering, and then the lack of control around that, it's going to lead a real good potential to sustainable fuels being alongside. Now, take the US, they've taken a slightly different approach. The EV tax credits have expired. High tariffs on Chinese battery components have made EV domestic production not great for mass markets. So people were afraid of range anxiety. Now there's a value anxiety. Resale value of EVs across the markets. You may have seen it in the UK, you may see it anywhere. You take a vehicle, let's take a vehicle that costs 60, 70K new. If that's an internal combustion engine, the depreciation on that will be far slower than if it's an EV or a hybrid vehicle. They depreciate far quicker. Now, if you're a private buyer and you've got anything about you in terms of nows, this starts to come into your purchasing decision. Because if you buy new, you're going to lose way more money on an EV or a hybrid than you are on a petrol or diesel engine car. So from a consumer point of view, this isn't being well looked after. Again, businesses take the hit in terms of the tax write-down or the benefits to the tax in terms of benefit in kind, but it's not working overall. I do think there's some real great bargains of EVs out there potentially for those that are all hybrids. When you look at the market, you can get some pretty snazzy cars if you can cope with the range and you don't mind the extra weight of the vehicle. So the key message coming out of the OEMs at the moment is powertrain flexibility. They are not abandoning hybrid. They are not sticking solely on EV, and they are not going to just bend to full compliance with the legislation, because it would, at the moment, it would destroy their business. So they're going to have to rely on lobbying to influence future rules to stave off their collapse. And if you've seen the rush of Chinese cars coming in, what the legislators probably didn't think was that by moving to this EV focused policy, that they would enable China to undercut and pretty much wipe out a huge part of Europe's and the UK's automotive industry, which at the current rate of things happening could well happen. China, in the words of many people in the automotive industry, has already shot off so far ahead, maybe no one's ever going to catch them. So powertrain agility, a lack of powertrain agility, stop the compliance spending and invest in the consumer experience, in software, in all the infotainment that's in the cars is a really big push. So if you're in the business and thinking you're in trouble in any way, this is your year to do your big capital write down, because in many ways it looks like you've just aligned yourself with the market and the decisions of the big OEMs. And I'm going to keep saying it. The last one I'm going to point out, Jaguar, whilst everybody else is doing massive EV capital write downs and bringing back hybrid, flexible powertrain strategies, what on earth is going to happen to Jaguar? I can't see it happening. I can't see it working. Sadly, we'll see. So I'm Fred, Future Engineering Bits. I'm a strategic operator and advisory in the automotive, motorsport and defense. And I work with private equity companies and capital investors, CEOs and boards to make sure the enterprise value and their bets on future engineering technology is in the right place, because I'm a chartered engineer. I've worked in Formula One, aerospace, rail, automotive, EV, hydrogen fuel cell in real life as a leader, and this is what I do.